Right now, every major financial media outlet is cycling the same story. Rate projections, earnings updates, dollar index chatter, but not a single one is covering the story that truly matters this weekend. The real story isn't on a broadcast. It's embedded in vault inventory numbers on a publicly accessible site that almost nobody checks. It's reflected in a physical price emerging out of Shenzhen, China, that almost no one is reporting. And it's hiding inside a Supreme Court decision that dropped this week and immediately disappeared from headlines. A ruling that shifts the math behind every macro assumption currently keeping Western silver below where the physical market indicates it should trade. A silver market closing the week at 84.52, up 7.77% in one Friday session, is not ordinary. But that isn't the real story. The story is what the market missed all week while those numbers were printing. China was completely absent. Lunar New Year shut the Shanghai Gold Exchange. The world's largest physical demand engine didn't participate in a single session this week, and silver still surged nearly 9%. If that's what the Western market does without its biggest physical buyer, the only question for the weekend is, what happens when Shanghai opens Tuesday morning and the full weight of Chinese physical demand returns to a market that already climbed 9% without it? That's not a prediction. That's a question the data will answer live. Ladies and gentlemen, Asian Guy here. This channel does one thing. Reads the underlying silver market structure using primary documents, Comex vault reports, LBMA rate data, exchange filings, and institutional sequences, and shows you exactly where to verify everything independently. Every data point comes from a source you can pull yourself. No products, no paid groups, no affiliates. The only output is a framework for interpreting what the raw data says when you strip away the financial media's spin. The silver market right now is not acting like the standard narrative claims. Prices tell one story. The structure underneath tells another, and those two things are about to collide. I'll show you exactly what the structure says and where to verify each point. Start with the anchor number. Silver closed 84.52 on Friday, February 20th, 2026. Gold finished at $5.1590. Gold-silver ratio closed the week at 60, all achieved with China absent for the entire trading week. Conventional wisdom says those conditions yield a flat week at best. Instead, silver gained $6.10 per ounce in a single Friday session, 7.77%. For the week, the move neared 9%. Gold finished at $5.1590, up $110.70 on the day. These aren't numbers of a market missing its largest participant. They reflect buying pressure so structural, so independent, that it escalates even when a primary engine is offline. Now add this week's macro event, immediately underreported. The U.S. Supreme Court struck down Trump's global tariff framework, ruling that emergency powers to impose broad trade duties were illegal. These tariffs covered imports from Canada, China, Mexico, and nearly every major exporting nation, projected to generate $1.5 trillion over 10 years. That ruling landed while China was offline. A tariff creating friction around Chinese physical silver flows was legally removed during the same holiday week Chinese demand was absent. When Shanghai reopens Tuesday, its buyers face a post-tariff ruling environment they haven't priced yet. The question forced by the data: if the Western market produced a 9% weekly gain during both China's absence and the tariff removal, what happens when that demand re-enters? To grasp Tuesday's weight, you must understand Comex silver's condition, not summaries or narratives, the raw inventory and its change rate. Comex registered silver determines delivery capacity. Registered silver is warrant-issued, physically present in approved vaults, and available for contract holders demanding delivery. Heading into the weekend, registered silver sat at 88.19 million ounces, essentially static. No significant inflows replaced what the February contract settlement absorbed, but static figures only show the snapshot. The drain rate reveals trajectory. In the last 4 weeks, roughly 90 million ounces left the Comex system, half, 45 million ounces, from Comex vaults, the rest from unsecured Western silver ETFs, liquidating holdings. Read carefully. 90 million ounces in 4 weeks. Registered pool at 88.19 million ounces is now less than what drained in a month. It's actively collapsing. The ETF drain has a name. BlackRock's iShares SLV, the largest Western silver ETF, is drawing down its own New York vault holdings, about 12 million ounces. SLV isn't neutral. It contributes directly. Every ounce removed from eligible inventory narrows the gap between eligible silver and deliverable Comex supply. Layer on eligible silver drain, another 1.2 million ounces left in a single session heading into the weekend. Total Comex inventory is net outflow at both tiers. Registered stagnant, eligible shrinking, SLV actively pulling down its holdings. Meanwhile, March futures carry open interest of about 222 million ounces. Gap between owed and deliverable supply, 134 million ounces. Only 15 million ounces rolled from March to May in the most recent session. 4 trading days remain. The pace is critically behind what's required to close that gap through paper transactions alone. Watch Monday's pace. It will reveal more about Tuesday than anything else. Now the global layer. The Comex issue and China reopening aren't separate. Multiple forces converge Tuesday morning. Before Lunar New Year, the largest Shenzhen silver recycler bid 93 RAs for 9999 silver. Western futures Friday closed 84.52. Shanghai spot was $86 before the holiday. That $93 bid reflects decade-low Chinese exchange inventories, not speculation. China is not alone. India absorbed 45 million ounces in the last month from the same Western Comex and ETF drains. Both nations pull from the same depleted pool, leaving Western vaults. The spread between Chinese physical bids and Western futures Friday close, $8.50. Tuesday's reopening doesn't enter neutral. It enters a market already structurally stressed. Supreme Court tariff ruling removes import friction, meaning repricing occurs immediately. Why the Comex registered pool is low, eligible draining, SLV drawing down, Shenzhen recycler bidding high, India absorbing. Sequence documented by Vince Lancency, Goldfix newsletter. China assumed suppressed Western paper prices would provide cheap silver. Conditioned behavior created structural dependency. Chinese industrials chronically short, relying on Comex deliverable silver. Invalidated by 13 million ounces reclassified as eligible, removed from delivery. Short covering hit Shanghai simultaneously, silver limit up. Supply conflicts extended geopolitical dimension, with Latin American silver concentrate bid up by $10 above market for Chinese buyers. This isn't commodities, it's institutional power structures clashing over industrial inputs. Long arc macro, commodity fund manager Lee Goring, monetary regime change underway. Gold signals it. Probable mechanism, Fed deliberately debasing dollar via debt monetization. Compare setup to 1977 in 1980 precious metals. Bull market, current move is first leg. Second leg changes everything. Silver Institute confirms 6 straight years of structural deficit. 2026 projection shortfall, 300 million ounces versus 800 million annual mine production. Countercase variables. UN strength reduces urgency of Chinese hedging, marginally compressing import premiums. Recent velocity. Silver $79 to $84 in one session creates short-term profit-taking. Supply-demand forecasts are modeled, may diverge. Tariff ruling eliminates cost friction, but combined with stronger UN, structurally cheaper dollar-priced silver for China. Data the countercase cannot address. LBMA, backbone of global silver lending, recently seized. Lease rates exploded, not speculation, but interdealer chain reached terminal node. Physical ounces, lent repledged exhausted. Structural deficit exposed. Fiscal arithmetic, tariffs projected 1.5T decade. U.S. deficit 2T year. Fiscal gap structural. Resolves via currency debasement. Reinhart Rogoff. Debt. 100% GDP increases sovereign risk. All major Western economies above threshold. 1974. U.S. Embassy cable. Futures market manipulates sentiment, not physical holders. Framework explains silver $72 dip. Structure held. Inverse head and shoulders and bullish swing failure patterns mapped. Structural bottom validated. Silver's pattern 40% drawdown below $120 peak, never violated 50% threshold. Historical parallel, 2000 tech surplus narrative failed. Same psychological function today. Manufactured dips are windows, not warnings. All frameworks applied tonight are public. Comex vault reports, LBMA lease rates, Silver Institute data, Goldfix newsletter, Embassy cable, Reinhart Rogoff research. No products sold, no paywalls. Show up, read structure, verify. Data speaks directly. Today, Saturday, February 21st, 2026. Markets closed, Silence deceptive. Convergence building in silver market. Comex registered 88.19 mAh ounces. Eligible 1.2 mAh ounces exit. SLV draws Auction 12 nanometer ounces. March open interest 222 nanometer ounces. 134 nanometer ounce gap. Only 15 nanometer rolled. 4 days remain. Shanghai and Shenzhen. Decade low inventories. 93 bid above $84.52. Western close. Supreme Court removed friction. Institutional rotation into precious metals yet to arrive. Gold-silver ratio 60. Secular low 20 implies silver $1,000 if gold hits $28,000. 90 Oz near-term threshold. 84.52. Friday. 4 things to watch. 1. Comex registered Tuesday morning. 2. Monday roll pace. 3. Shanghai opening price versus $84.52. 4. $90 Western futures. Market built for $30 Oz, now 3x higher with uncontracted physical demand. Structure shows conditions where paper price and physical reality cannot remain separated. Actionable prep, go to CME Comex Silver Vault report. Compare registered against 88.19 NAR, eligible against 4-week HAM 90 matters strain. Compare Monday roll versus March open interest. Tuesday, check Shanghai opening versus 84.52. Track LBMA lease rates. Silver Institute supply demand. U.S. customs versus deficit. 1974 embassy cable. Gold fix sourcing sequence. Reinhardt check Rogoff debt research. And if you want more sharp updates like this on boring currency, subscribe and comment boring currency so I know you're part of the community. This video is for education and discussion only. I'm not your financial advisor. I don't know your personal situation, and nothing here is a buy or sell recommendation. Do your own research and think for yourself.